Good morning and welcome this morning to Trader Talks. In today's market, the opening bells just rang, and that means it is time to get going this Monday morning. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. Thanks for joining me today. I've got Brent Moores out in the chat. He's going to be helping out in answering your questions, so be a part of that conversation. And I'm really excited about today because I get the opportunity to have my good friend and compatriot out on the road, Ray Kimbrell, here with me as well. Ray has been doing this for over, as long as I've been doing this, even a little bit more. Hi, Ray. Good morning. Welcome.
Hey, Ben. It's good to see you, my friend. And it's been 1 or 2 years on the road together, which has been great, actually. And we're still doing it.
Sure. Yeah, absolutely. So we've been with a big push on the road. We've been doing a bunch of events. We've got a little bit of a break from the road specifically, but not necessarily a break from education. So it's good to have you here with me. This is affording us the opportunity to have you on Trader Talks this morning. So we're going to get in and we're going to talk more with Ray here in just a second. A couple of quick housekeeping items, though, as we get started. Remember, if you are here with us live, you've got that chat capability there. If you are here in the recorded version, leave us a comment. We'll get back to you as quickly as we can on those comments. So a couple of quick things. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any kind. Remember that any individual symbols that we look at are simply for illustrative and educational purposes only. When we talk about options, remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Also, remember, we're going to be using the thinkorswim desktop software platform, specifically the Paper Money version. Paper Money version is great learning environment. It's a great sandbox to play in. However, it is not a guarantee of future success out there in the real world, and it does not do some of the things that a live trading account will do. So just be aware of that as you move your practice from paper trading to live trading. Also, remember that we're going to be using a lot of technical analysis in this discussion this morning. There are a lot of different ways to look at the market: probability analysis, technical analysis, fundamental analysis. Among those, all of those are theoretical in nature. None of those are guarantees of future market movement. Therefore, Schwab does not recommend the use of technical analysis or really any specific method of analysis as a sole means of investment research. Remember that past performance, no guarantee of future results. A couple of quick things, since we're going to be talking about a variety of different elements of the market today as things get up and running. First of all, if we talk about futures and futures content, remember we're talking about those as market measures and not as tradable instruments. If you are going to trade futures, by the way, I teach a class on trading futures every Tuesday morning. If you are going to trade futures, remember that futures trading is highly leveraged. It entails substantial risk. It is not suitable for all investors, and it requires separate trading authorization. Second, if we talk about some of the derivatives specific to virtual currencies, including Bitcoin and Ethereum and others, recognize that those involve unique and significant risks. We're talking about those as measures of market movement, not as tradable instruments. Understand that those are digital representations of value that do not function as a medium of exchange, and so they do have specific risks. So be aware of that in this discussion. So let's jump into our agenda today. We're going to talk about what's going on in the market. We're going to talk about the trends of various sectors. We're going to look at what is going on today, since we are, Ray, in the kind of beginning of the middle of earnings season. We're kind of in the heat of the earnings season here, aren't we?
Yeah, we are. And it looks like, really, I guess tomorrow really kind of kicks off the big day with a whole lot of earnings being announced and throughout the whole week. And as you and I were talking this a little bit ago, it's just we'll see, he's going to see how it's going to affect the market as a whole. But earnings, the earnings news and the movement really makes it change out there.
For sure. Well, speaking of that, I mean, we're taking a look here now at the S&P 500, and this is the index itself. And we've watched this index for a while. As we get started this morning, you and I were chatting. We said that the futures markets were up a little bit. And as we get started this morning, we see a little bit of a gap to the upside in the SPX into the cash open, right back up into that resistance level. I talked a little bit about this in our market and sector analysis webcast on Friday afternoon, kind of wrapping up the market, that this 66.95 level may act as a resistance. We're beyond that. We're 67.07 at the moment. I want to look at the shorter term chart here, Ray, on the SPX. We'll pop into a 5-day, 5-minute view, and you can kind of see that gap up and rally that's going on so far. Big shift in momentum, the RSI popping up into that extreme range. That doesn't mean, however, that this is over, but that it can't continue to go higher. But we see that gap up, and this next candle, this next 5-minute candle, as we're just continuing to talk here, Ray, is still continuing to move higher at the moment. So definitely some momentum behind this initial push in the SPX. Yeah.
Yeah, I agree. It's I was looking at the same level of resistance as well, in which it broke that and that continued the momentum. Good little push. As a matter of fact, as we go into the Dow and the NDX, you're kind of seeing the same thing happening throughout the market open right now.
Right.
So yeah, it's a little positive opening. They're digesting all the news over the weekend, see what's going to happen with all that coming up.
A couple of people asking the question. Yeah, for sure. A couple of people asking the question, Ray, in the chat about, whether or not this is forming kind of a potential head and shoulders pattern. And I would argue that you're probably right. I mean, we can see here on the NDX, there's the left-hand shoulder, that might be the head, and this might be the left-hand shoulder, and then the right-hand shoulder over here. The question is will this continue to push higher and break above that previous high? I mean, you and I talk a lot about the idea of what constitutes an uptrend being higher highs and higher lows. And we're not quite there yet, but at the same time, it's not sitting back down on this horizontal support that might be considered to be the neckline of a head and shoulders type pattern. So we're, I think, closer to that potential to break out and move higher than it is to that potential to break down and reverse. What do you think?
Yeah, I'm liking the gap up and that continued momentum that's happening, not just from the 5-day, but even this 1-year chart right here.
Yeah.
And it's I have a resistance level drawn. It's a little bit lower than you, and I have it gapping up above that on the intermediate resistance, right around that 24.
Yeah, right about there.
9 line. Yeah.
Yeah, I got you.
So I got a little bit of a pop right there happening on the way I'm looking at it. But
for sure,
yeah, I'm liking that momentum drive.
Well, and here's the thing. I mean, let's put all of this kind of into the context, right? So we're in the middle of earnings season. We had a lot of volatility last week. We saw the VIX pop up. We'll take a look at the VIX in just a second here. Additionally, we're in the middle of what is becoming a pretty extended government shutdown. I called it a slowdown, shutdown, standoff, whatever you might want to refer to it as. I mean, we're not going to take the political side here at all. We're just saying that is going to have an impact, especially as we get towards the later part of this month. And if that government slowdown, shutdown continues, it's very likely to impact the amount of data and the type of data that comes into the Federal Reserve for them making their decision about rate cuts as we get into the last week. It's next week, I believe, we have the Fed meeting as we get into the last couple of days of October. But at the moment, it certainly seems as if the overnight and the over the weekend kind of digestion of that volatility from last week is leading to perhaps a little bit higher push to the upside, at least in the S&P 500. You mentioned the Dow, and in the NASDAQ. The one that's maybe just a little bit different, one of these things is not quite like the other, has been the Russell 2000. And, it is up here, but it's really not breaking out yet above those resistance levels that we saw. But it, to be fair, Ray, had probably the biggest impact last week of the 3 major indices, didn't it?
Yeah, I agree. It's hitting right on that resistance level. Matter of fact, you have it drawn in there really nicely. And back to what you're saying, Ben, about what's going on with the shutdown, slowdown. I think as we go further into it and people get a little bit even more nervous about, okay, what's going to happen, might start reflecting on some of those things as well. But yeah, this this definitely is hitting right at that level. It's got a little bit of a pop, but
Yep.
it's right at it right now. It's stalled right at it.
And momentum is still moving a little bit higher, right? Remember the small caps, this Russell 2000 index, and we talked a little bit about this last week when I had, actually, I think it was just me on the show at that point. But we talked a little bit about the fact that the Russell 2000 also incorporates the regional banks, and the regional banks were the group really that took the brunt of things last Thursday and into last Friday. The regional banks with some news that loans, there were some loans that were going bad, and investors, I think we talked about the idea of climbing this wall of worry, looking for cracks and potential canaries in the coal mine that might be an impact. That's one of those areas that really kind of comes home to roost, because you talk about regional banks, those are the credit unions and the smaller banks, the money center banks and that type of stuff in terms of the financials. That's maybe a little bit different story, but it's generally the regional banks and those credit unions are the ones that appear in the small caps, where a lot of people have auto loans and home mortgages and small business loans and those types of things that may, that's why it is a closely watched sector. So Ray, I'm going to pop, before we go even anywhere else, I'm going to just pop over here and kind of get a sense of that. I'm going to go to the Market Watch tab. I'm going to go to the Visualize sub tab, and I'm going to break this down into the Russell 2000. We're going to drop down into financials within the Russell 2000, and then I'm going to come back down into those banks, and then even the subset here of the regional banks. You can kind of see those regional banks all kind of digesting. This is today's market as it gets open this morning and gets up and running. These are those regional banks that got hit so hard on Thursday and into Friday, now seem to be coming back a little bit. We're seeing some of these up, better than 1% or so in a lot of these regional banks. So maybe there is, again, that bullish perspective that those initial news stories were just one-offs, and there is still some strength here in these financial sector, at least in the Russell 2000 financial sector banks.
Yeah, that little, like you said, the pullback also makes people look at that and go, okay, maybe it's time to get back in. They're taking some opportunity there. So yeah.
Perhaps buy the dip mentality working here in these regional banks as well. Let's pop over here, Ray, though, really quickly. I want to pop into my VIX grid, and we'll just kind of take a look at what's going on with the VIX here this morning. Here's the VVIX versus the VIX. So the volatility of the VIX kind of coming back down. So it's getting a little bit less volatile, and we're starting to see that VIX very, very quickly. And this is kind of a more normal perspective on the VIX, is it spikes on fear and then back down. And we're seeing that bleeding off. I would be more worried if I were seeing the VIX kind of holding that, kind of breakout line that it had held for a few days, as opposed to kind of bleeding off very quickly. We've had a couple of those spikes where that volatility increases stayed for a little bit. This seems to be a little bit more normalized at the moment. What do you think?
Yeah, I agree. It's the pullback is, I don't know if I say good to see or not, but it's definitely shows that the typical trend that we talked about, and and reflecting that in the three major indices, as the fear is coming down a little bit, or being understood, maybe not the fear coming down, but it's being understood more, and waiting for the what's going to happen coming up here. It's kind of a pause almost, if you will.
Well, and I think that's too where we look at something like this, the volatility of the VIX. And I've talked about this before, about when that volatility of the VIX far outstrips the VIX itself. When there's more activity going on in the VIX and more range of movement than there actually is in the VIX itself, that's suggestive that maybe there was a little bit of panic, but now that those are coming back together, that there seems to be a little bit less so. The market kind of settling down just a little bit here. And oftentimes that big difference between the VVIX and the VIX, if we look at those times where there has been that big difference, that tends to point out the extreme level, and then the VIX tends to fall, which, it generally is kind of that mean reverting instrument, but that could be an indication. And again, correlation is not necessarily causation, but this is a kind of a correlated measurement
Yeah.
saying when volatility gets excessive, it tends to get sold pretty quickly, and it tends to come down a little bit here.
Yeah. Totally right on. I don't know if I can say anything, add any more to that. Yeah, exactly on it.
Yeah.
And that pullbacks, we're seeing it, panning out in real life here right now as we're going along.
Right. Right. So actually, out in the chat, Nathan's asking a question. He says, "Did we talk about the fact that if the VVIX goes higher than the VIX, that's an ominous sign?" In fact, exactly the opposite. That generally is an indication when you see the VVIX tracking, like I said, when you see the VVIX tracking well above the volatility itself, the volatility index itself, that's generally indication that volatility has spiked and is likely to bleed off, simply because that excessive volatility tends to lead to premium selling, and that brings the VIX back down pretty quickly. It's think about it like this, Ray. You and I talk about this when we teach the option strategies workshop out on stage. We talk about the idea that when there's demand for something, whether it's a glass of lemonade or whether it's a protected product like an option contract, that prices go up, right? Supply and demand drives those prices up. And then when those prices are high, that brings lots of sellers into the marketplace. And when there are lots of sellers and not as many buyers, price comes down. And that's just the nature of supply and demand. And that happens here with the VIX as well, because this is reflective of options premiums. So, hey, Ray, let's kind of pivot around here to some of the sectors and just kind of see how things are doing. I know we talked a little bit about regional banks, but I want to pop into some of these kind of sectors as they're moving. And then I also want to talk a little bit about gold and oil, because those are two of the things that I know a lot of investors have on their mind. So I want to look at this sector grid really quickly. And we talk about this in our market drive events. By the way, we're going to point out in just a minute where you can see Ray and myself and all of our other great education coaches, not only online, but also in person as we go around the country. But I wanted to take a look at the sectors here, Ray, and I'll put each one of these on their own size. But energy up a little bit today, despite the fact that oil is down, or was down this morning. So kind of an interesting move in the energy sector. The other area is materials, which largely driven by crude oil, and that's also going to be reflective, I think, of the home builders. But where I wanted to talk a little bit more is in this industrial sector, Ray, seeing a big move and a gap up here this morning above that 50-period moving average in the industrial sector. I know you were looking at some of those industrial sector stocks, not only in the Caterpillar space, which might be reflective of gold, but some of the other stocks in this industrial space.
Yeah, and you can also think about this: the cost to run industries like oil.
Yeah,
it's coming down. The industries can do a little bit better because they're not spending that money on things like oil and those type of activities. So yeah, it's kind of the one hand washes the other kind of thing as you watch what how oil prices drop. Dollar value, everything else. So industries can reap the benefit of that.
Yeah, indeed. And so one of the other areas we talk about a lot with the industrials is the fact that the airlines live in the industrial space. And so, but realistically, airlines probably a bigger read on consumer discretionary spending, but they're subject to some of those forces, including fuel costs. And so when those fuel costs come down, when heating oil comes down, that demand comes down, then you're going to start to see those airlines perhaps doing a little bit better as well. The next sector is consumer discretionary. And this is really kind of interesting because I think with this move today, we're seeing a rotation back into some of those consumer discretionary stocks. And we're going to get a read on some of those today with, or actually this week with Netflix and to argue maybe Tesla even as a consumer discretionary play. But those are going to kind of drive this space as well. And then, Ray, we've got consumer staples, which has been really interesting in that consumer staples down a little bit. We've got Coca-Cola earnings tomorrow. We had PepsiCo earnings last week. those are kind of the drivers of this consumer staples segment. They had been seeing a little bit of rotation to the upside, but not so much at the moment, are they?
Yeah, it's kind of strange too because when you have some fear out there growing, that's where a lot of the money can go. A lot of times, because these are the things obviously you have to have, right? So to speak. And so a lot of times you see that. So it is kind of a divergence almost when you see the fear coming in and this going not maybe as high or having that pop you might see in this kind of an environment.
Right. Right. Absolutely. So I wanted to answer a quick question that was out there in the chat, and I know Brent answered it as well. But the question is, why am I using a 50-day moving average as opposed to a 100-day moving average? And I've got two responses to that. One is the 50-day moving average or the 50-period moving average is a general view of kind of that intermediate time frame, quarter to quarter. We're in the middle of earnings season. So this is very much going to be the relevant, for a lot of traders that are intermediate term in nature, that relevant level of movement in a particular sector or in a particular stock. Why not use a 100-period moving average? And this is always the question, Ray, you and I get, and you've heard me, and I know you've talked about this on stage as well. There is no one best technical indicator, and there is no one best time frame for a particular moving average. A 100-period moving average is going to be a couple of quarters, so it's going to be intermediate bleeding into long term. Longer term is going to be, say, for instance, a 200-period moving average. Some traders will use a short-term moving average, like a 10 or a 20-period moving average, to make decisions in terms of short-term movement. But the 50 kind of cuts across the middle of that range. And since we're in earnings season, I think it's a reasonable approach to look at a 50-period moving average here. Don't you think, Ray?
As a matter of fact, we use, in class a lot when we teach, we're using that 10, 50, 200 to get, all three aspects and views of that. One other thing it does nicely, the 50 period, gives you a good intermediate term a trend and use that trend as support and resistance as well.
Yeah, absolutely.
So, throughout the whole morning when you've been pulling these up, and hopefully the viewers noticed it as well, you got to see where it's been bouncing off or breaking through that 50 period, such as right now.
Right here, it bounced down from it. Right here, it's broken through that. I mean, we've seen it act as those levels, especially as we go into those earnings seasons. Healthcare may be giving us a little bit of a bull flag. So this sector up today as well, because it looks like consumer defensive at the moment, or consumer staples at the moment, as far as the ones that we've looked at, really the only of these indexes, or these sector indexes, that is down at the moment on the day so far. Financials even up a little bit with the strength of those regional banks and the strength of financials in general. Infotech up again on, we've got a bunch of news coming out when it comes to things like Apple and we've got Marvell, we've got Skyworks, we've got others that are. We got NVIDIA and Taiwan Semiconductor news. We've got, potential softening of the tariff issues. So a lot of things going on that are bringing this market back into an upward direction. Now, utilities, on the other hand, which have been kind of the strength darling here recently, Ray, starting to see maybe this little bit of a pullback. The attempt at a bull flag kind of giving us a gap up and a little bit of a sell-off this morning in terms of the utility space.
Yeah, it's definitely been a driver, and I think you're right on the money with the attempt of the flag pattern trying to form up here. Kind of early to say, I think, right now, but yeah, it's definitely something to keep on your radar, especially watching with the fuel prices.
Right.
Oil, everything else kind of helping with this as well.
And interest rates as well. And I think that's one of the big impacts of utilities as well. And real estate up considerably this morning. A little bit of a shooting star type of candlestick there, though, on the top of that breakout. Maybe finding a little bit of resistance at that squeeze line, that diagonal downtrend line. You and I talk a lot about price patterns. We talk about the fact that there's action potentially to be taken when we get breakouts of those price patterns. Maybe not quite seeing that yet here in real estate, kind of staying within that.
No, extend
range.
those. Extend your right lines on both those on that pennant.
Yeah.
And
we take it right out there. It's kind of right at that level, and we take this one and we extend that. We're kind of right off that support level. So it's kind of right in the middle of that squeeze, getting deep into the apex of that.
It's getting to that point where, what am I going to do? And, so, yeah.
So let's do this, right? Yeah, for sure. Let's pop over here to my single grid, which is kind of my sandbox to play in here. And let's take a look at, we'll start with the SPX as this comes up. There's the SPX this morning. But what I wanted to look at really quickly, and I mentioned this earlier, is we want to take a look at gold. Not GL/GC. Now, we're looking at the futures contracts. Remember, these are for market measurement, not as tradable instruments, although I do teach these as tradable instruments in my futures trading webcast on Tuesday mornings. But gold seems to be kind of giving us a little bit more of a upward move today, not breaking out of that range. But if we look over here on the right-hand side, that pullback on Friday maybe wasn't as bad as it certainly seemed to be on Friday. Does it look that way?
Yeah, and gold obviously is one of those materials that when there's a lot of fear, and look at look at this been doing over the last 3 months.
Yep.
That's where a lot of people start putting a lot of interest in that. Yeah, look at that since this last month at least, really driving it. And so
one of the things that we talk about, and you mentioned the bull flag that we were looking at there on the utility space, or that potential bull flag, is this could be a potential bull flag as well. We know that bull flag pullbacks, especially in strong momentum moves, those pullback portions of a bull flag. If you want to think about what a bull flag is a rally up and a pullback, and then a rally up from that pullback, and that's driven a lot by institutional investors that push price and then let it settle back so that they can get in at a lower price, and then they push and fill the rest of their orders. So in a bull flag, we can have up candle, up candle, up candle, up candle, and then generally we think about a bull flag being 2 to 5 days or 2 to 5 candles in a pullback, red candle, red candle, red candle. But sometimes that's up candle, up candle, up candle, one down candle, and then an up candle following, right? That pullback can be, a 1 day pullback. And that might be what we're seeing here right now on gold, don't you think?
As a matter of fact, you've seen that if you go back, Ben, in that same pattern you're just talking about, back right there and then right there. Yep. So you've kind of seen that happening as this has been doing that explosive move to the upside, which is a key factor of the flag. Definitely can happen. It's happened many times in not just gold, but in across the market.
Well, and this is one of those areas where, again, we look for confirmation, right? Because confirmation of a particular movement comes, and again, we're not looking at trading this as an instrument. There are other products and things that we can trade relative to this. But confirmation may come on, a move above the high of the low day, for instance. That's one of the common ideas that you and I talk about, and we teach, is that close above the high of the low day, or close above the high of the low period, or whatever it is, if you're using weekly charts or 5-minute charts, whatever, it doesn't matter. In fact, we even have a webcast that talks about trading price patterns. Kevin Horner, our good friend, who's also out on the road with us quite often, talks about that as well. That idea of trading these price patterns. Let's take a look also, Ray, at this one. In addition to gold, this is kind of the other driver when it comes to kind of market perception, and that is crude oil. And crude oil pushing to the downside once again, ticking a new recent low, of course, in the last 4 or 5 months or so. We've got some absolute lows back here in the April-May timeframe, but still pushing lower, don't you think?
Yeah, it's amazing. Also, that sorry about that. It's also amazing to see also that pullback in oil, and the
Yeah.
same time frame, the explosion of the gold. They're
Yeah.
almost you know
Almost oppositional. We can even
almost
do that.
opposition.
Let's do that. We could do that. Let's come over here and let's do a comparison, COMP comparison. And by the way, it's just this easy to put a study on the chart. You can just go in and you can type that in. We could even type in the Ray study and we can find the Ray
Yeah,
bull or bear power study. I don't know what they do. I've
me
never
neither.
used them. This might be the
Good.
exception to the
It's a
one
good
best
name for a
study out
study,
there.
though.
It
Yeah,
is a
it's a
good
great
name for
name
a
for a
study.
study.
I agree. All right. For the moment, though, we're going to leave that one. We're going to leave that one alone. We're just going to put this comparison study on, and we're going to change that to / So we're looking at crude oil. So we're going to change this to / GC, which is the futures contract for gold, and we'll apply that, and we'll see. There's kind of that oppositional movement we're seeing in gold versus crude oil. And not necessarily those two are correlated or inversely correlated, but they do seem to be that way at the moment, don't
Yeah,
they?
and they also, and even when you look back, when they kind of went sideways,
Yeah.
they pulled up a little bit. It does they do tend to a degree, but yeah, this recently with the big pullback in oil, the big rise in gold.
Yeah.
I'm sure right now, if you look at the dollar value, also usually gold and dollar usually are inverse.
Yep.
But yeah, it's a good thing to look at and
Yeah.
watch as you're
So John the Noble Savage asks a question. He says, it's kind of inexplicable the fact that we're seeing this crude oil pushing down, even though we've seen, reduction in supply. Although on the one hand, we've got reduction in supply from areas like Russia, but we've got an increase in supply, as there almost always is, from OPEC plus. And so there's crude oil out there.
Yeah.
And if there's crude oil out there and there's demand that is falling, the perception is that demand is falling. If you look at U.S. hiring, we look at jobs numbers, which we're not going to get accurate. Okay, I'm saying this quote unquote. We're not getting accurate jobs numbers as if we ever did because of the shutdown, right? But we're not getting accurate jobs numbers. But there is that perception that if hiring is falling off, unemployment is rising, that demand would be falling. And we're starting to see that maybe weighing on crude oil, and you're probably also seeing that weighing on things like / RB, which is gasoline.
Yeah.
And I know this is a lot of regional impact as well, because I know where you are in Texas, Ray, where I was in Little Rock last Monday, it's gasoline is about $1 cheaper or so than it is here in Utah, and about $2 cheaper than it is in California at the moment.
Yeah. Yeah, we're doing pretty good. We're at 250 a gallon right now, so it's been definitely coming down
for sure. And I didn't want to tell my wife how little I paid for gasoline when I was in Little Rock, because she was really annoyed at how much she had to pay for gas. So anyway, that's one of those things that is kind of a nice, interesting relationship here. So that is crude and gold and gasoline here. So I'm going to take that comparison chart off really quick. A couple of other areas that I want to look at really quick, / BTC, because this is one of those areas. And again, I'm going to just make this disclaimer. It was in the disclaimers that I showed you at the very beginning. And I want to make a verbal disclaimer of this. Remember, when we talk about these cryptocurrency futures contracts, we're using these as a measure of market movement, not as tradable instruments, number one. And make sure that you're aware of the fact that these have their own unique and specific risks. So beware, properly warned you be, says I. But Bitcoin seems to be bouncing at this point off of that kind of expansion pattern, that widening pattern here. And if we also take a look at / ETH, which is the Ethereum futures, it seems to be bouncing here today as well. So maybe a little bit of up move in the Ethereum and Bitcoin space.
Yeah.
So, Ray, let's talk about some individual stocks. I know you had mentioned Caterpillar when we were talking earlier this morning and getting ready for this, talking about the fact that Caterpillar, if you think about what drives Caterpillar, it's industrial demand. What drives industrial demand for big, heavy machinery? Construction.
Yep.
and mining. And Caterpillar is significant in terms of its mining impact. So as gold goes, so goes Caterpillar in a lot of cases, don't you think?
I think so. Matter of fact, it's kind of you put that back on that one. It looks similar as well. The yeah, and it's forming that explosive move since September,
Right.
and creating several flag patterns. Matter of fact, it looks like it's trying to create one right now. So as you
So we could draw a level of support in right there, and we could take a look. So let's kind of put this together, Ray, because I think this is one of those elements. So we know, and we've talked about in the webcasts that we teach, and in the stuff that you do with me and have done with me on Your First Trade on the Schwab Network. By the way, Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. You're a frequent contributor on my show, Your First Trade. We've talked about how traders look at entry signals into trades when prices are moving higher. And one of the things that traders look for is this pattern of a rally up, pullback, and a bounce, looking for some kind of confirmation of that upward movement as an entry signal. And the question often is, Ray, well, why don't I just buy it right here? Why do I need to wait for confirmation? Why don't I just buy it because it's cheaper right now?
Yeah, I mean, you can anything you want,
Sure.
but it's depending on how you set up your trading patterns. You know, that's how if that's what you do, then follow your plan.
Yeah.
But you know, a lot of traders like seeing that confirmation. They want to see that momentum. So, for example, Ben, as you already talked about earlier on a flag pattern, you want to see not only that bounce, but possibly that break out of the high of the low day, even.
So if this is our low day, so if that's our low day, if we look at where the low is, 526.97, and our low so far is 526.94, actually 526.94, that's just, you know what, I'm not going to split hairs here. I'm going to call this the low day, and I'll tell you why, because the low isn't necessarily in on this day yet. It is just starting here this morning. So we have the first low that we really have is this one at 526.97. So what I'm looking for then in terms of an entry signal based on this idea of a close above the high of the low day would be a move above this level right here at 542. We'll call it 542.01. You could call it 542 just to round that off. Traders like to round numbers. But what we could do is we could put a buy stop order in at that level and just simply say, look, I'm going to wait for it to break that level. And now people are saying in their heads, yeah, but why am I going to wait for this to move another 12 points higher, 13 points higher from where it is instead of just getting in right now? And the answer is, we don't know if it's going to turn around yet, do we?
Yeah. I mean, it still go ahead and, I mean, there's a $1.50 dividend being paid out right now, $1.51, I think.
True.
So that's driving it down a little bit, but it may just break down and to find that next level of support, well below that large candle that formed.
Yep.
You know,
so I'm just going to do this.
Yeah.
Oh, go ahead.
No, I was going to say you want to, you know, in most, not most times, but as you want to trade this more short term, if you want to see it break that low day, you know, put that stop order at that. And a lot of people forget about that, Ben. They just think you got to wait. You could put an order in a buy stop, not just a sell stop out there. And so you can.
So we're going to call that. We're going to call that 540. I'm going to call it 542 even. Yeah. I'm okay rounding in this particular case. 542 even, just for easy math. And this says stop, wait, don't do anything until price gets to 542. You think, well, it's a 528. I'm just going to buy it right now. And like you said, Ray, you can do that. But this setup, this waiting period waits for price to actually give confirmation that it is moving higher. Still not a guarantee that it is going to move higher or after it breaks that level or closes above that level. But at the same time, it gives maybe a little bit more confidence that price is moving in the direction you want it to go. The bus is going north instead of south.
I was about to bring that up, saying, you know, if back to your analogy, if you've been to our classes, you know, and it's Ben's analogy, get on the right bus. You want to get on the northbound bus as opposed to the southbound bus.
Well, and you could argue that this bus has been going north for a while.
Yeah.
And is likely, given the idea of a trend, likely to continue going north. That's not a guarantee by any means. It could turn around and go south. And so we would protect that perhaps with a stop order in place. But that's definitely something that we can kind of think through here. Now, the other thing to think about is that, remember that this is a stop order. And so we do this. 542 is the trigger price for this stop order. It says, stop, wait, don't do anything until this gets to 542, and then issue a market order, a marketable order. So if this were to gap up on news, for instance, there is the potential that this could get filled substantially higher. So you got to be aware of that. We could make it a buy stop market or buy stop limit, and then you're going to have that same characteristic. You're going to have a range in which it can get filled, but there's the potential that it wouldn't get filled at all if it blew through the limit range. So, stops aren't guarantees of where the order gets filled. It's just a guarantee of where it gets triggered. So you got to be aware of that. And so we'll go ahead and click on confirm and send. I'm going to put this in my market movers group just so I can keep track of where it is, and we'll click send. And that order is sitting there waiting for the circumstance to, and again, remember, this is not a recommendation. This is just simply an illustrative example. However, I will give you a recommendation here, Ray, and that is this. I'm going to pop over here to schwab.com/coaching. And if you've not been to this particular page, it is kind of the landing place, the central repository of all of the wisdom of coaching. It is the place where you can link to our live webcasts. We teach 30 hours of live webcasts a week. It's where you link to the information about our live events and our virtual workshops. By the way, we have one of those starting up tonight. So my recommendation is this: if you have an interest in learning more about advanced option strategies, if you have an understanding of option basics, that's a good background to have going into this, come right over here to the live webcasts link on schwab.com/coaching. And then what you're going to do, if you look down here, you're going to see all those virtual workshops and webcasts. If you just deselect webcasts, so it takes those out of the list, now you're going to see our virtual workshops. And we're starting this tonight. It is at no cost to you. We've got lots of space in this webcast, so you can come and join us. We're not limiting the seats like we have to do sometimes in our live events, but you can join us for this Advanced Option Strategies virtual workshop tonight through Thursday night. And then Friday, we've got a question and answer period on Friday morning. But you can just join us, click on Learn More, and you can register for each of these events. Yeah, go ahead and register. You can click on Register Now right here, and you can register for one or all of the webcasts. We would love to have you do that. I'm going to do this really quickly. I'm going to just take this link. Now, when we post links out there in the chat, remember that these aren't guaranteed for accuracy or time or anything, but that's a link that you can follow to get into this virtual workshop, Ray. You're going to be there. Scott Durfee's going to be there. I'm going to be there. It's going to be fun, don't you think?
Yeah, it's going to be a great workshop. I think, Ben, you do an excellent job at presenting the information for advanced options. And the other good thing, Ben, on Friday, it's a different time, but the Q&A session. So
yeah,
all the participants have the ability to send questions in that we go through a hot seat, put you on the hot seat, and we fire them at you for an hour. So it's pretty
for sure. Hey, last thing, the next thing I want to talk about really quick, we got just a moment or two here left. I want to go to our in-person events link. Coming up next, we've got a little bit of a break from being out on the road, but November 22nd, we're going to be in Anaheim in the shadow of the Mother Park of Disneyland. We're going to be right there in Anaheim at the Anaheim Marriott doing a market drive events, an all-day ideas to actionable ideas discussion. We're going to take macro themes. We're going to talk about how do you build a watch list? How do you use the tools? How do you build options trades? It's a great day. We buy you breakfast. We buy you lunch. We've got a great networking reception afterwards. It is at no cost to you. We would love to see you there. Just click on Learn More and you can register for that event. Then we're going to be in Houston, and then we're going to finish up the year down in Miami doing another Advanced Option Strategies live workshop. So we would love to see you there for that event as well. Check us out also here on the Trader Talks webcast page. Give us a quick follow if you're right there. Click on that subscribe button. You can follow me on X. You can follow Ray on X. You can follow Brent Moores on X. I'm at Ben Watson CS. Ray is at Ray Kimbrell CS. Brent Moores is at Brent Moores CS. Ray, thanks so much for being here. The time always goes so quickly.
I know.
But I just wanted to give you a big shout out and a big thanks for helping me out today in this Trader Talks webcast and for everybody being here.
Yeah, I want to thank everybody else also for being here. And thank you, Ben, for another great morning. And trade well, everyone. Trade well.
All right. Hey, I will see you this afternoon for our Advanced Options virtual workshop. Take care, everybody.
All right, see you then.
See you then. Bye-bye.